Am I like the Simpsons? Am I predicting the future? Hey, it's Andrew, one of the Brothers of Bargains here from Ride Time. And sure enough, at the end of last year, I made a video just talking about some of the predictions that I made. And truthfully, I made a prediction that even went one step further than what I thought was gonna happen. I had predicted that in 2023, we were gonna end the year with less non-prime lenders. It's actually gone one step further. In the last week, we've seen two major lenders across the country go away. So the first was Source One Financial. Source One Financial, they dealt with people with less than perfect credit. And if you know anything about Source One, they actually lived a little in the higher tiers of the market. They dealt in higher interest rates than even some of the other players. And what's happened is, as used vehicle prices have stayed high and actually accelerated a little bit this year, it's harder to find those well-priced vehicles to fit for the approvals for that lender. So I can't speak too much to the details of exactly why Source One ceased operations. As of September 8th, they have stopped doing business in Canada. Now that leads me to my next one. And truthfully, I didn't think this was gonna happen, but we lost a prime lender in Canada. And on the surface, it sounds really, really, really bad. And you know, full disclosure, I'll tell you, like in 2019, they made up 37% of our business. Now the pandemic changed a whole bunch. It changed the way they looked at the auto business, and it changed how they bought their deals. And they became a smaller and smaller portion of our book of business. So going back to 2020, they went from 37% in 2019 to only 20% of our business in 2020. And that number fell further to 15% in 2021 and only 10% in 2022. And the truth of it is, we haven't originated a loan with the Bank of Montreal since October of 2022. Basically, what ended up happening was they got really tight with who they would approve. So the only customers that could get approved with them had choices at every other major bank. They were the best of the best credit. Well, they were offering worse terms and higher interest rates. So if you have somebody that could go anywhere, why would you send them to the bank that were giving them the worst terms? It just didn't make sense. So as of September 15th, they announced that they were exiting the indirect automotive lending business in Canada. Now that's gonna come with, unfortunately, them having to lay off some of their staff. Here's the tough part. Once that is kind of closed, it's very, very difficult to get back in. And we saw that with CIBC. CIBC was a big player in the auto space. They exited, and it was decades before they came back into the automotive space. So I just wanted to make a quick video, give a little bit of an update. You know, you might see some gloom and doom people on internet, because I saw one video, he was calling for the absolute collapse of the car business. You know, you're gonna be able to buy the car for 50% off. You know, there's so many fundamentals in the market of why that's not gonna happen. Yes, we are losing Bank of Montreal. We did lose Source One, but banks are still saying yes to contracts. Rates are elevated, prices are elevated. The fundamentals behind why that's happening, they're still really strong. Again, my name's Andrew, one of the Brothers of Bargains, and if you have any questions, don't hesitate to reach out to myself or any one of our teams. And at Ride Time, we have your ticket to ride.